Hey folks, Dan Bird here for the Daily Scan, October 21st, Tuesday. And guess what? The internet's back. So Stock Charts is working today. Looks like there are lots of sites down yesterday. It looked pretty interesting what happened with AWS. It didn't really affect Amazon. We'll look at that in a minute. But actually, I'll look at it right now. Let's take a look at Amazon. I thought it might have an effect on Amazon, but it didn't. So here's what Amazon looks like. It's actually breaking out today. So Amazon might be a good entry point, except for I'd like to see it break above this trend line right here. So it's above the 21, it's below the 50. If it breaks above this trend line right here, then Amazon might be on its way. Now, Amazon reports, I think, next week. We'll look at her reports here in a minute. So as always, I am not a financial advisor, so this is for educational purposes only. And take a look at what's happening right now. 10-minute charts. So much nicer when the internet is performing correctly. So nice gap up this morning, actually yesterday morning. Weren't able to look at these yesterday, but then went sideways, pull back a little bit, but now taking off right now. Money flow looks great. Technology starting to move higher. Discretionary definitely going up. So Tesla and Amazon are both in this group. So they're moving higher. Tesla reports tomorrow. Communications is heading down, however. So 2 out of the 3 aggressive sectors are doing well. For the defensive sectors, they're all heading down, except real estate up a little bit. Excuse me. Real estate up slightly, but looks like the rotation is into aggressive. So the market is in a bullish mood today. The cyclicals, industrials looks like the big winner today. That's the one that's really taken off. Healthcare is starting to move up as well. And if we look at the rotation, growth versus value, interestingly, is actually down. I would not have expected that. But discretionary definitely is moving up. Technology slightly up. Some semiconductors is up. It's interesting that growth is actually moving down with all of these aggressive sectors doing pretty well. Don't know what that means. We'll have to watch that and see how it plays out. So breadth starting to move higher. Percent of stocks. This is for the S&P above the 20-day moving average is above 50. The percentage of above the 50-day is above 50%. And of course, the 200 has been above for quite a while. So breadth looks great. On the Russell 2000, small and mid cap, it does not look as good as the S&P, but money flow is pretty good and it's starting to move higher right now as well. You can see right here it's pretty flat versus the S&P. So this means, the IWM versus S&P is flat. However, mid caps and small caps are outperforming the S&P. Breadth on this one's mid caps, you can see above 50. This one is just getting ready to cross 50. For the small caps, same thing. And for the NASDAQ, pretty much going sideways right now. But interestingly, even though the S&P was looking pretty strong, the NASDAQ 100 is actually the one that looks the weakest of all of them. You can see up volume minus down volume right here is pretty low. And advancers minus decliners is sitting right at 0. So there's an equal number of advancers as decliners, but the VIX is actually dropping rapidly. So all of that implies that the market is in a bullish stance. The breadth for the NASDAQ 100 looks really good. Stocks above the 20 and the 50, definitely well above 50%. In fact, above 20, it's at 75% right now. So 75 out of the NASDAQ 100 are above their 20-day moving average. All of that is overall pretty bullish as we head into the finish of the last quarter. We actually have earnings coming up. We'll look at the dashboard right here. You can see the Dow, S&P moving higher, NASDAQ 100 slightly lower. The VIX is now below 20 and collapsing, essentially. The 10-year is down quite a bit. 10-year is down at 3.95, so it's below 4 now. Very interesting. And the TLT, the 20-year, is moving higher. Commodities, gold is down, silver is down, oil is flat, crypto, Bitcoin is up today, up 1,800, it's up to 112, and Ethereum is up as well. Bitcoin is outperforming Ethereum slightly. They look pretty equal. Down here, consumer discretionary, as I mentioned before, and industrials, these are the two big winners for today. You can see that they're definitely moving higher. The bottom is utilities, staples. Those are the two defensive areas. So overall, the market looks pretty bullish today. And Netflix reports tonight after the close, and Tesla reports tomorrow after the close. So, and Intel is the day after that, after the close. So these three probably are going to set the stage, set the sentiment for the rest of the week. Next week are the big ones reporting. So that'll be a really important week next week. Now, if you want to look at these to see which companies are reporting, if you go to the website, and you don't need a subscription for this, but on the main page, just go to the home page, and on the top right here, this little button right here, click here for current earnings calendar. That will take you into stock charts, and then you can sort this. You can see ones that have reported, ones that are upcoming. You can sort it by large cap. You can sort it by NASDAQ 100, which is what I just showed you. So there's Netflix and Tesla. Honeywell reports on the 23rd. So that's the way you can do it. You can look at different groups, however you want to do this. Technology right there. So that's right on the homepage of the website, right there. All right, let's take a look at something that was interesting. I put this in the newsletter this past week. Go to the charts page, and at the very bottom left is the Hindenburg omen. And first I'll look at it on a daily chart, which is basically how it's created. And you can see right here, normally when you get two in a row, and within a 20-day period, basically within a month, so 20 trading days, you get two in a row like this, usually the market will start to go down, but not immediately. Might take a little bit of time. Right now, we had all three of these firings. So these are the criteria for the Hindenburg omen. The index needs to be above the 50-day moving average. In other words, it's in an uptrend. The McClellan oscillator, which is a moving average of the advanced decline lines, needs to be below 0, which means overall it is has more decliners. And then new highs and new lows both have to be above or below 2.5%. That's the hardest one right there. For both of those to be above, for advancers or stocks making new highs being more than 2.5%, and stocks making new lows being more than 2.5%. That's hard to do. And you can see right here, all three of these things triggered right here. And then one of them came off right there, and then two of them. So now we only have one, which is being above the 50-day. So you can see the McClellan oscillator is back above 0. So we're going back into a bullish area. But whenever these things happen so close together within a month or a 20-day trading days, then usually within the next couple of weeks, the market starts to roll over. However, it's important to understand, and I actually put it right down here, the omen's rate of success is estimated at only 25%. You can do a ChatGPT search for this Hindenburg omen, and you'll see that. I also did one for weekly, which I think that's not really how it's created, but it was interesting with weekly is that we actually are down here now. So this is starting to pull back, come off of that. So just an interesting thing to keep an eye on, to watch. So let's go back here and let's see. There were a couple of questions. One was the money show. Somebody asked me, how can you find what the upcoming money show classes are going to be? And you just go to moneyshow.com right here to their main site, and you can then find all of the events. This is the Master Symposium, which is happening in Sarasota. but you can just go to themoneyshow.com and you can find all of them. There's the one in Vegas is in February, I believe, February 23rd. All right, let's take a look at a couple of requests, Oracle and Celsius. And here's Amazon. We talked about that. CELH, Celsius. Celsius is consolidating, pulling back slightly. You can see momentum is rolling over a little bit. So Celsius might be consolidating right now. Just taking a break, which soon might be a good entry point. If it pulls back to the 21, that's the thing to watch. Here is a longer term weekly view. You can see it's just been heading up for most of this year, continuing to go higher. So Celsius is consolidating and not doing too much right now. It does have a negative divergence on the weekly chart, so something to watch out for. And then the other one was Oracle, which has had a great run. Oracle, this is a weekly consolidating sideways right there. If we look at this on a daily, you can see it's also in a consolidation, pulling right back to the 50-day. So this might be a good entry point, although it doesn't look like it's quite ready to start to move higher. But right at this point is usually a good area. Now, if I put in a support line here, right at this level, you can see that's right in the middle of this gap higher. So it could actually come down to that level right there, which is at 235 roughly. I'm sorry, that's not 235. Let's see, tell you what it is. Right here is 260. So it could come down to about 260, but it's sitting right on the 50-day right now, right at 275. 279 was the last price, so 275 right in that area. This might be a good entry point for Oracle. Looking at it closer up, it's actually in a squeeze right now. It perhaps might have a hammer today, sitting right at the 50. So this actually probably is a good place if you want to add a little bit or give it a try. The only thing that concerns me is the 8-day is getting ready to cross 21 right there. So that usually indicates that it's a short-term down signal. It's also below the chandelier exit. So those two things I don't really like about it. So you might want to just let it prove itself or take a small position and see what it does for Oracle. All right, that's about it for today. I may or may not be doing these videos this week because I have company visiting, so I have to try to get them in when I can. We're going to be taking them out to different various places here in Southwest Florida, which right now the weather is gorgeous down here. This is the best time to be here. So if I can, I will do some videos, but I might not be able to get to them. So that's what we look like right now. Now, the end of this week will be the CPI report. And I talked about CPI before. On headline CPI, this is the chart. This is the base effect. So with the base effect, whenever a large one drops off, like we're going to get in December, January, and February, then CPI will go down. So these 3 months here, CPI or inflation is going to look like it's dropping off a cliff. But this next one is not really a big one. Right now, I think they're projecting CPI to come in at 3.1. It was 2.9 last month, which is exactly what was forecast, but that was 0.2 higher than the previous month. So it's gone from 2.7 to 2.9. February of last year, it was 3.0. If we get 3.1, that is going to be hotter, I think, than anyone's really expecting. I don't think we're going to get 3.1, however. I think we might end up with 3. It could go up slightly. But one of the reasons I think that is if we look here again on the website under commodities, these are all under economic charts. Under commodities, you can see for the period that CPI is going to be reported on, which is this grayed out area, most of the commodities have just gone sideways, other than copper, gone sideways or down. And oil and gas has really dropped off a cliff. Now, a lot of that was right at the end of the month. So earlier in the month, it was just going sideways or up slightly, but at the end of the month, it really dropped off. But because of all of this and the fact that we are going to get one dropping off the base effect, I don't really see us getting to 3.1, but who knows? It could. Be careful if that happens. That's on the 24th. That's Friday. We have two major reports, actually three, with Netflix, Tesla, and Intel reporting this week. And then next week is when all of the big ones start reporting. So next week is the ones we really want to be watching for. So here's NASDAQ 100. So let's take a look at next week. We got Google on the 29th. We have Meta on the 29th. We have Microsoft on the 29th. We have Apple on the 30th and Amazon on the 30th. So next week is going to be really all of the big large cap tech stocks. And if they all start reporting great earnings, that's really going to push the market higher. It's going to really start to take off. So we'll see. Of course, if they miss, it's going to be the opposite. So we'll see what happens next week. All right, let's go back. And before I close out, let's just see what the S&P is doing right now. Pulling back slightly, but pretty much just kind of flat from the open today. So it doesn't look like it's doing too much right now. And IWM, also same thing, went back up to the close of yesterday and now kind of moving slightly lower, but money flow is still looking pretty good. So we'll see how this does into the end of the day. But right now the market's sort of flat, digesting the move from yesterday. Yesterday was a great move. By the way, if we go back here to the market bias page, I do update these every night. You can see the market bias is starting to tick up slightly. Here's the S&P. Definitely looks much more bullish. And if we look at the S&P here, you can see that the flip line is way down here right now. So it is not breaking out yet. So very close to making an all new high, but it is not quite there. So I think that really is what we want to be watching for. And Netflix and Tesla earnings, I think are going to push it one way or the other. Either break out and start the rally into the end of the year, especially with the big tech reporting next week, or if both of them come in with weaker earnings, then it could push us right back down here to the 50. So we'll see. This is going to be this and next week are going to be really important weeks. All right. Thanks for watching. Let me know if there's anything you want me to check into. Please like and subscribe, and I will talk to you later. Take care.